Checkity check, 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 check. All right, I see the volume bars now. All right. Good evening, everyone. Hope everyone's having a great day today, and happy Monday to you all as well. Um, so hopefully everyone had a lean day today. Mondays are always difficult. We don't trade heavy on Mondays because we don't know what direction it's gonna go. And after a big range week, I've been saying all day yesterday and today, um, we are expecting consolidation, and in consolidation we did get today. We got the top of the range, we got the bottom of the range. Um, so today we're gonna take a look at some of the market structure from today. And we're going to point out some areas that were high probability and things that we were looking at that enabled us to head higher for the rest of the afternoon after we dipped past sell side liquidity. But for tomorrow, we certainly want to take a look at some of our typical things. So we will prep for tomorrow as well, and go from there. Yep, so let's go ahead and get into the charts. So tomorrow, Tuesday, we have a lot of Fed speakers, so you know what that means. Be careful, stay light around that time, because any of that interactions could certainly cause the market to manually intervene. Not cause the market to intervene, but somebody's going to manually intervene in the markets. So 8:30 trade balance, not going to be a massive there we go. 7:30 Fed speaker, 8 o'clock Goolsby speaker, 9:15 Barr speaker, 10 a.m. Fed speaker, 1:25 Fed speaker. So as you can see, there's a lot of Fed speakers here. So we're going to want to stay careful tomorrow. You can still trade it, but generally when you have this many speakers, you're going to see a little bit more touchy-feely type action. So that's all for that segment there. So let me take us over to the charts. We're going to start with the market review today because there's a couple of key important things that we noted that we want to point out from today. So, and actually it might be easier to, let's stay on this view because it might be easier to see. So we know that this past week it's just been a roar to the upside, right? We know that it's been absolute, one-sided, and that's good. We want to see that. And we want to also note that in the coming week, we aren't sure exactly what direction it wants to go because we've hit a lot of really key levels here. As you can see, where price is right now, we've hit a lot of key levels where we had previous consolidation as well. So we're going to be wary about that. First things first, let's talk about the market review today. During Asia and London, if you recall, during the beginning of the day, before we saw any of this stuff, we had marked out a previous relative equal high. And this comes from over here. We can see these relative equal highs. So we had marked that out, and we noticed that when we woke up, London hit it, creating yet another relative equal high. On the Asia side, we see that we had created an Asia low and a London low, and that that same London low happened to be the real-time open range settlement low as well. So that was something that we were looking for all day as we saw price head upwards. We anticipated that price would end up going to the buy side, taking it, and then coming back down. So what was I saying during the stream? I was saying that, hey, watch and see how these hourly candles react. And you can kind of see them hugging. They do wick up here, causing some damage, but they end up hugging this key level here. And so you saw me during the day, you saw me take some shorts today, and lo and behold, what happens? We end up taking creating these relative equal lows down here, taking it briefly, and then completely dropping down and heading down past Asia's low to create a low of the day, which then we end up spiking back up in that following hour. And then we end up ending about pretty close, and we end up closing above that relative equal high. That's a key important piece there. So what do we have now? We see the markets come back down at the end of the day. We see that we've started to create another, like, stay in that consolidation zone right there, right beneath the 50% mark of the monthly upwick consequent encroachment. So oh my gosh, I just realized, wait, oh, I am on, okay, I thought I was muted this whole time. So this particular setup here was looking for it to take buy side, come back down, make sure we're closing beneath this, wait for time, and for it to do its thing, and then take this short down to sell side, and then see if it would continue back upwards, which it did. There is a really key specific level, this low of this hourly candle. You can see the low there being 15,138, right? So what was that? Let me bring over a larger screen so we can see a little bit more. So I'm gonna go to the hourly on this one. So what was that? Anybody out there? Does anybody know? So we were looking at this low here, right? 15,138 right there. You can see that I had drawn this out a long time ago, right? 15,138. What could that be? Well, if you don't pause right now and kind of look back in your charts and see what it is that I see, it's not going to be as impactful for you. Michael Tapiero. Hey, welcome. Glad to have you here, Michael. Welcome to pre-market or post-market analysis and pre-market review for tomorrow. I actually won't be here physically tomorrow, but I'll be recording the price action as well. So just going through some market review tips and tricks from Inner Circle Trader myself. So we're going to continue going. So this low was 15,138. One of the best setups that I love looking for here was that 15,138. Now I was in a meeting, so it's kind of miffed that I missed it. But you can see it's a previous short-term high, and where do you see that? You see it right here. You see, right here. Sorry, I was pointing the wrong one. So right there, we see a previous short-term high. So over here, we had broken through low, high, lower, low. And then we have a higher high here. And then we come back and revisit this. Now, there's going to be people at this point that are waiting to get their shorts that want to get rid of their positions at break even. And in addition to that, there's smart money that wants to go long at that time too. So when we take a look at this, we call this rather Inner Circle Trader, or Michael Huddleston. Michael calls this something called a mitigation block, and it is a very powerful thing that comes with very, very, very accurate, high level accuracy and precise movement. And you can see how price goes immediately to that. That's not random. It's not magic. It is price action after taking this sell side liquidity here. So there were pretty much about 3 plays that I could see. This short, and this long were the 3 major big plays that we could see today. Now let's go down to a 1-minute chart just to see what those look like. Can you explain the mitigation block, please? Yeah, so in ICT Core Content 2016, so it's Inner Circle Trader, the YouTube channel, and if you go to month, I think it's month 4 or 5, it will actually have a training on mitigation blocks, but the concept of the mitigation block, okay? The concept of the mitigation block is such that we have, where's that short-term high? So let's go back to the daily or actually the hourly, so we can explain this a little bit further. So the concept of the mitigation block is this. Back here, we saw that there were people that went long, and then there were a whole bunch of people that went short here very, very quickly, right? So these shorts here, they're winning, they're maybe taking profit, they're winning, and then, oh, it's going against them a little bit. Oh, it's going against the shorts a lot, up until it gets past this point. It spikes above here. So people who didn't have stop losses on, they might be underwater now. So that meaning they are negative in their position. So what does that mean here? So we have a low, high, lower low, higher high, and then it comes back down here. Right at that point, right at that level is where these shorts want to get out at break even, while all their other people wanting to go long, institutions want to go long in that area because it's in a discount at that time. So because you have both of those, you'll generally find explosive movements when you see signatures like that. That is it in a nutshell. But Michael, I would highly recommend you go study. Well, you can study them if you want to. I have studied them for many, many, many hours, but Inner Circle Trader has everything you need to become a trader there, if you haven't heard of him already. So we're going to take a look at the 1 minute, though, to take a look and see what kind of plays formed. So this is the morning, and this is on the 1 minute. We see London. You know, you wake up around here, you wonder, okay, what's going on? London high is here. We see at Bell, we see a spike almost all the way up to that monthly inversion fair value gap high. And we kind of chop around here. It's a very difficult trading situation, but certainly tradable. We recognized it was trading within a consolidation, and we took this short down to the new week opening gap here. And when you end up seeing this, we were always looking for evidence that things were going to head lower. And so what we see here is we see the ability for us to take shorts. There's a fair value gap here. If you were to take this fair value gap, you would have put your stop above these relative equal highs. We noted these relative equal highs to be important because price got almost up to them but didn't quite get there further. So, and then we head downwards, right? So this was definitely a short worth taking, because this would take you all the way down to take out sell side liquidity once more, and then all the way down to Asia low sell side liquidity, which you could have taken profit here, could have taken profit back here, and then of course you get one more shot to take profit out here too before we rise the rest of the day. So you can see on the 1 minute time frame that there were a whole bunch of little entries, whole bunch of little fair value gaps that people can entry on. Institutional order flow right there, right? Fair value gap, heads up into it, boom, stops those out, boom, continues to take more, comes back up to take some more orders, and then heads down, gives up the ghost, and eventually taps the previous intermediate term high. So that was the review of price action for today in a very, very quick nutshell. And it's going to seem fast. Yes, this is This is a channel where I'm assuming that you have gone to Inner Circle Trader if you aren't familiar with him already and studied some of his concepts. 2022 model first. Somebody had asked me this earlier today. Study the 2022 model first if you're new, then go into it understanding that he refers to, Michael refers to some of the earlier core content in 2016, probably the first 6 to 8 months worth of content there. He refers to things you learn about in that segment here. So tomorrow, what can we expect? So we're on the daily right now. Let me blow this up a little bit. You can kind of see where we are heading right now. So this is today's price action. So we're still moving, starting up, movement up, right? What do we see on the upside for us to take? Well, we have this weekly SIBI high we haven't touched yet. This inversion fair value gap high, if it can contain price, then we have a lot of daily imbalances to the downside that we can use. So I'm in ICT core content month 3. Great. Yeah, the first few months are amazing. They are good primers. Market Maker Primer series is also excellent from a theory perspective. Scout Sniper is a little bit more difficult to digest, but it is still equally as valuable. But you already have, newer content as well. So great job, Michael. Keep studying. Don't get discouraged. You'll get it there. You'll make it for sure. I myself started in October of 2022, and it's taken about a year and some change for me to feel really, really comfortable trading. So you'll make it there though, for sure. So we know we started the week green, right? Similar to how in the beginning of last week we had dipped down. We actually started this week green as well, straight to the top, right? A little dip down, but straight to the top. Now, we can't expect all the weeks to work the same. So what that means is we can do our best to identify where the next draws on liquidity can be. So here we see this daily, and then also we have this as a fair value gap low. So you see that low here to this high, it's a fair value gap. It's a fair value gap in the premium side of things too. So there's definitely a lot of fair value gaps open to the bottom side, which I'll be targeting. But we also have this volume imbalance up here. So Fed speakers might not be enough to get it up there, but at the very least to aim towards that would be, we would need a huge continuation tomorrow. We would need, maybe we see a drop down into the 50% mark of here, and then we see further continuation upside. I don't know. BISI, yes, buy side imbalance. BISI stands for buy side imbalance, sell side inefficiency. It's a term that ICT coined as well. So this is a buy side imbalance. It's a fair value gap, but it's specifically a buy side imbalance, sell side inefficiency fair value gap. And we can certainly see it drawing towards that. If we see any of this price start to draw down and below and close below the new week opening gap, you better bet that I will have this level very much so ready to go to trade to, either through or to reverse on. And I don't know if we're going to reverse on it, but judging how we went up first, I imagine that this week we will come down to hunt some of the fair value gaps that are resting below current price action. So I think that we can certainly watch out for the 50% mark of this daily wick. So we anticipate price going to there. and then potentially rejecting there as well. Let's see if there's anything else here. So tomorrow, you want to see if Tuesday you're going to see a high of the day, and then we head south further, or if you see us travel lower first, then we might see a kind of seek and destroy type week, which will be pretty rough. Let's see if there's anything else happening here. Doesn't look like it. So I mean, you know that there's liquidity resting below you. Let's head down to 240. This is just the 4-hour chart here. And we certainly do see that there's this large gap on the 4-hour. If price can get below this mid wick consequent encroachment, then it can pretty much continue downwards into this fair value gap, and that's what I would expect as well. Let's go to the hourly. Okay. So on the hourly, we are in this consolidation range right here. You can see it, right? Let's see, what is this? Control F12. So this is the kind of box that we're in right now, or a consolidation zone. We want to see market movement above or below this tomorrow. Okay. Insert name here to the downside. Let's go. Let's go. Yeah. So I don't know if we're going to go to the downside, but there's certainly potential for us to head upwards still. And I know there's a daily, I can't go back far enough for this, can I? So this is a daily imbalance. I mentioned this, well, I was going to mention this if I didn't mention this, but there's a daily imbalance with a short-term high on the hourly above it. So that's an area I might look to. Yeah, you can kind of see them mentioned here, but there's also, you know, fair amount of liquidity to the downside too. So there's more liquidity to the downside than upside right this very moment. But there are some certain catalysts happening in the world where the Korean exchange prevented short selling. They basically banned it. So that whole market went up like crazy. And here we are in the middle of a range and at the very top end of a range too. So if I'm going to favor something, it's generally going to be some level, you know, if I'm gonna afford to trade, I guess, in this environment here, I want to know that, hey, we're smack dab in the middle here of two major fair value gaps that can be traded to first, you know. So tomorrow we want to see, the first things we want to see first are, we want to see the bodies of these candles. We want to see those violated in one direction or the other, because once that occurs, you'll know roughly where you might have reversed otherwise. It's not going to be high probability at all. You are taking a bit of a gamble of having price come back on you really quickly. So be careful with that tomorrow. Again, I'm not going to be here physically tomorrow. I'm going to be recording price. I'll try to pop in for a morning, but I actually won't be able to. I might have to do it super early, like 7 o'clock. We'll see. because I've got a dentist appointment as well. So I get some straight teeth, or teeth cleaned rather. Yeah, I mean, look at Asia. It's just really hanging out in its own little range right there. We did see the real time hour opening range gap get filled and then immediately repriced, rebalance. And so I imagine that if it stays above this area, it could continue to bounce from there and head higher first. So we'll see though. We will see. So I think that is going to be it. You know my targets to the upside. You know my targets to the downside. And yeah, I mean, if it's downside, that's where I'm best at selling short. I mean, that's my bread and butter, you know. So with that, let me open up the forum for some questions. I know this stream's on a 10-second delay. YouTube delays it by 10 seconds rather. Any questions from the audience before I close up for today? Because I need rest as well. What you got? Hopefully this was helpful. But yeah, I mean, as always, you know, want to appreciate everybody who's been joining the streams and liking the streams and really helping in that way. Like, I'm really blessed to have you guys here and helping grow the channel and get it to some other viewers who might be interested in looking at price action and having somebody talk about ICT concepts here. So, you know, insert value name here, like, you know, appreciate you being here, Michael Tapiero. Appreciate you being here too. Very exciting to see that you're on your journey 3 months in. So cool. So cool. I remember when I was 3 months in and everything that ICT said felt like magic and I didn't know how to do any of it. So give it some time and you'll get there for sure. Get some rest. Remember, Tuesdays are by Tuesdays there's a something like a 50 or 40 something percent chance that the high or low of the week's been made. And by Wednesday it jumps up to about 70% of the time. So so yeah, I think wait for, you know, just watch the FOMC members. You can probably try to trade it, but I imagine it's not going to be like big moves. I imagine we'll stay within this consolidation a little bit, at least throughout London open. And yeah, I mean, that is about it for tonight. We're going to keep it nice and short today. And yeah, I don't think there's anything else on the charts. So I guess what I could do is also pull up some of the results. Let me think about this. Actually, you know what? I already talked through results at the end of the day, so I'm not gonna discuss results further, but I have 3 more performance accounts that are finishing their 7-day evaluation, and so by this time tomorrow, I'll have back to 19, 20, or 20 some accounts that are performance accounts as well. So while it is kind of cool to have like close to a little over $1 million in funded dollar amount, it is very how do you say, deceptive when you see and hear people that are saying, "Oh, I'm funded like I'm funded like 500,000 or 150,000." In actuality, let's be fair. These accounts get blown in minus $2,500, right? So you actually only have that much of funding that you're really working with. So you'll hear a lot of people out there saying that, "Oh, I'm funded 500,000. Don't believe them. I mean, just do you and get these funded accounts and get them to make you money. That's really all that these are here for us to get financial freedom. That's the goal, right? So, so yeah, I mean, funded accounts are going really well ever since I've changed how I look at risk. And for all that are wondering about this, I have the risk spreadsheet. It's pretty much ready to go. I just need to figure out a quick little dispute, which I'll figure it out by probably midweek, latest. But basically, I have to figure out how to rewire my johnnyleetrading.com website, so that it actually has what it needs to do its job. So we'll hope to figure that out at the end of the week at latest. And yeah, I think that's it though. Have a great, let me go back to webcam mode. So today, it's Monday. Let the week pan out. Let the week show you where it wants to go. This week, there's not nearly as much as last week, but Wednesday, Fed Chair Powell speaks at 9:15 a.m., so please expect a lot of volatility Wednesday. Thursday, again, unemployment claims. Friday, preliminary U of M sentiment. Michael Tapiero, I'm currently trying to get a funded account. Great. That's awesome. I actually created a video. If you go to my channel, which you're already familiar with, right? So over here on this playlist, you're already familiar with Apex Trader funding, so you probably don't even need to use this. I don't know if you're using Top Step or what funded account prop firm you're using. If you want to tell me, you can. But for Apex, I've already come through with this lesson on how to pass the evaluation accounts, and a strategy that I would do if I were to go back with one account only and I was only allowed to have that account, I would build it the normal way. I would build it with low risk. Now building it with low risk does mean that you're only risking 1 or 2% at a time. And you can absolutely pass these funded accounts by trading the lowest 1 micro at a time. For sure, you can pass these accounts. But it's hard to stomach for many people. And if you are 3 months into ICT, honestly, like, I do wish somebody would have told me this, and you're not going to believe it right now. But the best thing you can do is take that evaluation account and then trade in simulation mode. You want to trade demo as long as you can, as long as you can help it, because that takes the risk aversion to losing money. Even if it's an evaluation account, you take the loss aversion away, so you learn exponentially faster that way. Don't rush it like I did. I blew a lot of money blowing performance accounts early on in my career because I didn't know what I was doing. I didn't really know how I was trading. So so that was something that that I just didn't understand. But now I do. Now I know that and actually if you go to the risk management, there's a link in the video, actually in the description of the video here. I need to figure out how to make this clear, but if you go to that, you'll be redirected to my temporary website, which I'm collecting everyone's emails that I can talk with them afterwards. But I'll be sending out a new version of my risk calculator, which is this thing here. And you can calculate what is your max loss in terms of risk as well. And then you can also calculate your max profit based on number of handles you get and target, right? So this is the next version of it. I'll be emailing it out to people in a day or two. Only people who have initially downloaded from that list and have said yes to, like, yes, like I can email you basically. I'll be sending that to those folks. For everyone that did not accept marketing, I am sorry, I don't have your email, and I won't be able to market to your email because I want to respect that. So, um, but yeah, Michael Tapiero, uh, I know you're not probably going to listen to this, random person um, who trades Apex Trader Funding as well, but my advice to you would be to trade sim as much as you can. Even 3 months in, you'll benefit yourself greatly. You'll increase your learning curve greatly that way, and then you'll know when it's ready to trade live funds. But who am I to say? I only have 19, well, technically 16 performance accounts running right now, with 3 more to come probably day after tomorrow. So, cool. Update for the accounts though. The drawdown accounts, one was minus 1500, it's down to 762, negative 762. The other one, same 1500, it's down to negative 818. The one that was down 2,455 is down to 2,058. So I've really kept a lot of room open, and you can kind of, here, let me show you. So these were the drawdown accounts. These are the ones that I purposefully put into heavy drawdown in order to teach one of my friends that, hey, it's not the big profits that you get that will get you paid. It's the risk management. So I showed this colleague of mine that, hey, I can take this down to, this was down to maybe 2 more trades left until I would blow the account. So when you get down this far, it's very easy for you to think, okay, let me just blow the account. I have a whole bunch more to look at, right? No, you want to treat every single performance account as it's the last amount of money that you have, and you want to look for your A+ setups. It's really key that you know what your model is before you trade. And these will turn into regular accounts soon. You can see how, I've already passed these 3 Apex ones, are the ones that are still pending. I blew 3 accounts like a couple months ago, and have never done since. So yeah, low risk is where it's at. You will stay in it for the long run, and if you stay in it for the long run, you're gonna do good. Just try not to get frustrated. Blowing accounts is part of the journey. It is not fun, but that's the whole point. It's not meant to be fun. It's meant to be painful, so that you can then learn and stop doing that. Stop doing stupid trades, being disciplined. That's really key. So, all right, it's 10:10 now. Michael, great to have you on stream. Insert name here. Always love having you here. Appreciate you. And yeah, I don't know who else is on tonight, but good luck trading tomorrow. I unfortunately will not be able to join you, but let me know if there's anything that comes up. Just let me know, and drop it in the comments of this video, different video. I'll probably see it anyways. So with that, I am out. Have a great night, and we will talk soon.